Hi, it's Greg Rand. This is an SFR portfolio review. Austin, Texas, 11249. 33 single family rentals, fully occupied and performing. Asking price $6.4 million and change. And before I get into detail on the portfolio visualizer, I want to show you this clip.
Greg Rand, radio host and CEO of real estate website Own America, is back with us now, and he's got two cities in particular to consider. So let's start with Austin.
Austin, Texas, right. Austin, Texas is the state capital of what people argue is the best run state in the country. Okay, it's one of the best run states. So it's a highly efficiently run city inside of a highly efficiently run state. It's got a lot of tourism coming into it. There's actually a lot of culture in that city. But we track migration patterns. Where are people going? Where are jobs going? And Texas is sucking population from all over the rest of the country like crazy, and Austin is part of that. But there's a story behind the story. If you look at the housing price numbers in Austin, most of Texas, including Austin, has basically bucked the whole housing recession. All right, they've got some pain, but it's not anywhere near as traumatic as it is in other places. And the reason for that is the Texas Association of Realtors over the last 15 years has been fighting allowing home equity lending to go up to 100% financing. In other words, they effectively limited home equity lending up to 80% of value. So where there's negative equity in a lot of parts of the country as a result of 100% financing, they literally fought against their own self-interests.
Police themselves.
Exactly right.
Yeah, look at Austin. I know college towns are great, just
right.
Inherently, and Austin is sort of it's not like Ames, Iowa. It's a big college town, but it's also a government seat. I mean, they're in the state of Texas. So it has both of those things going for it. How many jobs are we talking about are government jobs? A lot of them, probably.
A lot of them, but it's not a bloated government. Okay, it's an efficient government. So in places where we're afraid we have a bloated government, and if the governorship changes hands, they're going to be losing a lot of jobs. We don't see that kind of same problem in Austin. But you're right. If you go down the main drag in Austin, it's not quite at the level of like Nashville or New Orleans, but it's kind of tapping on the door in terms of just the people in the streets and the bars and the restaurants. So it's a draw. Colleges drive investor opportunities there also because of a transient, people base in that regard.
Right.
Research, yeah. So it's a good buy.
I made that proclamation on the Fox Business Network back in December of 2011. And the analysis that I'm going to show you on this portfolio right now still holds true. I'll share with you what the market did since 2011, and it was all spot on. And it wasn't rocket science. It's just understanding population trends and figuring out if what is great about a market is likely to continue. I'm going to run you through our portfolio visualizer real quick and give you some of the highlights. Number one, this portfolio has a gross yield of 9.42%, which is pretty darn good right now in the state of Texas. Usually Austin is lower than Dallas and Houston, and right now even Dallas is starting to poke into the sub-10 gross yield market, so this is good news for Austin. We've got a 4.75% net yield, but we've got a 49.5% expense load. We laden these things with a genuine institutional level expense assumption load so that nobody underestimates. And so you may be able to run this portfolio more efficiently, but even with almost 50% expense load, it's 4.75. And the combined rate of return is 9.33. What makes up that combined rate of return? That is the net yield plus price appreciation. I'll get to that in a minute. The market is off the charts in terms of long-term price appreciation. We've got cash flow projections in here and investor equity projections that you can change assumptions and watch the way the outcomes change. But let me focus real quick on the mapping. Okay, this is very well spread around the same areas in and around Austin. Okay, of course, our system allows you to come and drop the little man right wherever you want and see the nature of the neighborhoods. Go into the individual property analysis. I'll glaze over right now, except to observe that the prices range from the 150 range to the 280 range. This is the money chart for me a lot of times, and that is the price appreciation. A lot of people have a hard time getting their brain around how do you quantify price appreciation. Sometimes they throw their hands up and say, we're not going to quantify it. It's all about cash flow and yield, and the appreciation is a bonus. Well, let me make a suggestion. We take a 20-year average, and we compare the market where the portfolio is with the state and the country and draw conclusions, because on a 20-year average, you've got the ebbs and flows all averaged in. And the county of Williamson County is a 4.58% annual average. The state is 4.14 and the country is 3.44. So a solid point higher than the national average. But look at the performance here. The blue line is the United States. And if you spend time on our site, you'll get used to this because it's on every property and every portfolio. And we love it because you can see the boom times, you can see the correction, you can see the recovery. So what you see here is the stress test of the last 20 years. Wartime, peacetime, Democrats, Republicans, all kinds of circumstances, and the national market kind of peaked, troughed. And what we always do is draw a line from the beginning of this chart, cut the peak and the trough right in half, and then continue that line and get a feel where the market's going long term. And so we feel pretty confident the US still has upside because this has been a lot of makeup time right here. Take a look at Texas and Austin. Two things to draw from this. Number one, there was no party in Texas. Right here was the party across the country. Look at places like Phoenix, Vegas, Tampa, Orlando. You see a big party and a big hangover. Nationwide, still a pretty big party and hangover. Texas, not so much. Okay, so a lot of what drove prices out of range around the country, which was funny money, 100% financing, etc., didn't make its way to Texas. And so you see no party and very, very mild hangover. But then you see the market taking off. And this is a quality of life, cost of living, migration, and population-driven trend. And you might look at this and say, wow, this can't sustain. And so I'll say a couple of things. One, let's do the same exercise. Start at the beginning of the curve, cut the peak and trough right in half, and follow it out. And yeah, the market is a little bit inflated according to that analysis. But carry it out 10 and 20 more years. That's what Austin is going to do. This average is going to hold, we believe. And this curve right here is signs of a really, really healthy market. Now, what makes it so healthy? Population growth off the charts, migration patterns totally lopsided, unemployment below the national average, which is awesome already, and then job diversity. Let me make a point here. This is the state capital. State capitals, okay, Raleigh's another example, are usually hip, cool towns that have a young population, a lot of universities, and this is one of those blue cities in a red state, okay? A fiscally responsible state and the state capital that runs it, and really jumps off the page. So you have the best of a music scene and a foodie scene and a university driver and a tech driver. The number one job category in almost any state capital is going to be government. Okay, here it's trade, transportation, and utilities. So business is the number one job category in Austin, which is the state government in the state of Texas, and yet it's number two. Number three, guess what? Travel and tourism, leisure and hospitality. That kind of job diversity screams a lot of good things are happening in this city. It's attracting businesses, opportunities, people who go there to school never leave. If you know anybody who went there for school, you know they never left, right? So there's a reason why Austin is doing so well, and those reasons are not slowing down. I'll concede not a correction of any kind of depth. I'll concede maybe a flattening. Maybe we have a couple of years coming up at some point where Austin is going to do a 3% appreciation or 2.5% appreciation for a couple of years, which is why we don't talk about short-term investment strategies here. We talk about long-term, all right? And if you're going to buy on yield, you're going to lose some yield points on this and buy in the below 5, but you're going to gain it back because the combined is really, really powerful. Okay, so go to ownamerica.com, look up portfolio number 11249, ask us any questions you have, download a spreadsheet, analyze, make your move, and make an offer. Thanks for watching.